Hey guys, what is going on? Welcome back to my Robinhood portfolio. As always, hope you guys had a fantastic day of trading today. As you can see here, the portfolio ended the day in the green, up 722.96, representing 0.55% of the overall portfolio. You can also see here we just got out of active hours trading. We are currently in after hours trading, and so far not a lot of movement, simply down $3.49. Overall, the major indices were somewhat mixed today, but not a lot of movement. The S&P 500 was down 0.09%. The NASDAQ was up in the green, but only by 0.01%. And the Dow 30 was down 40 points, 0.17%. The overall Dow Jones Industrial Average hanging out at all-time highs, currently ending the day at 23,422 with a 52-week high of 23,602. So pulled back a little bit from all-time highs, but it's still been a very, very strong market over the last few weeks or so. Today, I'd like to talk a little bit about contrarian investing. A lot of you guys on the comment threads have been asking why I jump into stocks like GE, Ford, L Brands. Why do I jump into stocks that have been really pulling back in stock price quite dramatically over the past year? And the reason I do this is because of an investing style called contrarian investing. So let's kind of jump into the portfolio here and pull up some of these stocks that kind of talk about what contrarian investing is all about. So on screen here, you can see I have GE pulled up, ticker symbol GE, General Electric. You can see the company stock currently is at $20.33. But over the last 1 year here, you can see it's pulled back from a high of about $31 or so, down 29.56%. And you can really see that here in the 5-year graph. You know, very good performance over the last 4 years or so. And then over the past 1 year, you can see it's been pulling back at 1.3154, 30.80 or so, then pulling back all the way to $20.33. I've been doing a little bit of day and swing trading with GE, nothing spectacular. I did a recent market buy on November 6th for $1,020 or so of capital, 50 shares at $20.40. The stock did kind of trended up today, so I went ahead and just sold those off. $50 50 shares at $20.44. So made about $3 or so. Nothing spectacular. Just wanted to get out of the stock, to be quite honest. Did not want to hold that over the weekend. And the reason I'm jumping into these types of stocks is an investing strategy called contrarian investing. Basically, you're banking on the fact that a quality company, has a transient price movement that is somewhat drastic, as you can see here, pulling back 30% or so, and something that's affecting the company that can be changed or reversed. So if we take a look at that 1 year graph here, down 29% over the last 5 years, it's only up 15% with this big pullback here. And really what you're banking on is the company to make changes and the profitability to be restored. And really it's about confidence of the investors, because the company in and of itself really has no reason to drop from $31 or so all the way down to $20.49. What it really has to do with is investing confidence from shareholders. If they're not willing to hold the company because of earnings, because of direction of the company, so on and so forth, a lot of investors will start selling off, and the price of the stock will drop way below what it should be valued at. I do believe that's what's happening with GE. Not quite sure where this nadir is going to kind of settle out at. I think it's probably going to be around $18 or so. But I think this company, one of the original S&P 500 stocks, a blue chip dividend, high dividend stock, can come back. It's made some recent changes in an executive class. Its CEO, a lot of the upper management has been shuffled around and changed. It's really refocusing its business efforts. Over the last 5-10 years or so, one of the iconic CEOs of the last 50 years or so, I would say, left the company. And really since that time, the company's had little direction. It's been kind of bloating itself up, getting into other businesses that it's really not successful in. This is a very large conglomerate company, and it's really become bloated. There's really no good direction. And because of that, expenses have got out of control. And you can see on the bottom here, earnings have also suffered quite greatly as well. You can see 20 cents, 25 cents, all below 30 cents here. In the last quarter here, the expected earnings per share way above the actual earnings per share. So the company has been struggling mightily, but I do believe this company can turn around. It's a very large company. If we go back to the bottom here, $173.36 billion. And And this is with that big 30% drop in the price of the stock as well. So this was close to a $300 billion market cap company. So a very large company. I think with the appropriate changes, just because of how big it is and how influential it is, it can definitely turn around. And when it starts turning around, the confidence from shareholders will come back. And I do believe this stock will probably level out around $26 or so. At least that's what I'm thinking. So you can jump into the stock, and then when it starts rebounding, you can make a very, very good return on your money. That's the whole point of contrarian investing. Take another look at Ford, for example. Ford, a lot of folks did not like Ford. We're getting scared by some of the cyclical operations in automotive stocks. I guess there's an 8 or 9 year cycle where there's very strong performance just because people are buying new vehicles. And then once that cycle is kind of nearing the end, people are holding onto their vehicles. Nobody's really buying until new models start coming out. And then there's another cycle that is basically another strong performance cycle. And really, we are ending a supposed cycle here with Ford. But revenue for Ford has been at all-time highs. Again, I guess you can consider that being at the end of a cycle. But this company literally makes $7 billion in net profit per year. It makes millions of cars. Unlike Tesla, which currently has a larger market cap, but Tesla makes like 80,000 cars per year. Ford makes millions. Tesla has a negative earnings. Its PE ratio is infinity just because it has negative earnings. On the graph down here on the bottom, you would have negative for Tesla. But for Ford here, you can see it has had very strong performance. And even the last quarter here, the actual earnings per share beat the expected. So it's been very strong. It's got a good product line. It has, billions of dollars in net profit. But confidence has really been waning in investors, and you can really see that over the last 5 years here. It was trending down quite considerably. And even though that this is a very large company, one of the leading automotive manufacturers in the United States, it still did not have the confidence of investors, and the price of the stock kind of trended down here. And just like GE, it recently replaced a lot of its upper executives. Its CEO has changed. It's refocused its efforts. And you can see over the last 1 month here, over the last 3 months, it's up 12.38%. Again, there's been a little bit of waning in confidence with shareholders just because of the nature of the automotive industry with its cycling over the 8 or 9 year period. But I really believe this is a great stock moving forward. It's got a great dividend yield, which I don't believe it's in any jeopardy of getting cut. You can see currently 4.946, PE ratio very low, very large blue chip, high dividend company. A great stock to hold longer term. And I've done a lot of day and swing trading with this stock with some great success as well. So that's why I'm buying into Ford. I think it's undervalued, and I think over time, not only can you get that great dividend, but you can also get some great capital appreciation because it is undervalued. Another stock I'd put in that same class is Target here. You can see over the past 1 year, it's down 8.31%. And over the last 5 years, you can see it's only up 15.29% with this big steep drop-off here. I was thinking about maybe putting in some more capital. Did not do that. Kind of wanted to see how this played out. And really, over the last 1 month here, you can see it's up 3.64%. And over the last 3 months, it's up 10.83%. So this would have been a great stock to jump into. A nice little swing trade here, almost 11% swing trade if you could time out that nadir. Another stock that I've been doing a lot of day and swing trading with, at least about a couple weeks ago, was LB here. Made a big mistake with this particular company. I held on to my capital. Unfortunately, I jumped out of this stock. And you can see over the last 1 month, it's up 17.29%. You can really see this downtrend here over the last 1 year, down 22.35%. And over the last 5 years, you can see dropping from a high of about $90 or so, all the way down to this nadir here. And this is where I was buying into the stock. I thought it had some great long-term potential because this is a parent company for Victoria's Secret, as well as Bath and Body Works, two very, very well-known companies that have very loyal customer bases. You can see those big trades I made there. Just doing some swing trading. It's got a huge dividend yield just because of the price of the stock has come down so much. But over the last 1 month, up 17.29%. And really, over the last week here, you can see this big jump up here. Excellent performance over the last 1 month here. 5.48% over the last week, and last month, 17.29%. So I think I sold a little bit prematurely on this particular company. But again, that's the whole idea behind contrarian investing. You try to find companies that you think are undervalued just because of the momentum in the price of the stock pulling back. The company's undervalued. It may be a very established blue chip company, or a company that has some very loyal customer bases like a Victoria's Secrets would, or Bath and Body Works would. You buy into the company on the nadir, and then when it starts pulling and back investors with confidence, this price of the stock will spike up, and you can make a very, very good profit, much more than the overall market or a normal stock that is relatively valued appropriately. So you're trying to find companies that you think are undervalued. So L Brands, I definitely think fits that mold. Another great stock, Equifax. After that big data breach, there was a lot of overreaction in the market, and you can see this huge plunge here from 141 all the way down to 94.38. This would have been another great stock I should have held on to. Excuse me. Over the last 1 month, down 4.01%, but the last 3 months, down 23%. But you can take a look here. I guess this is really showing it very nicely here. It doesn't fit into the nice graphs on the bottom, but you could have bought back in at like 98, 97 or so, and then sold off at 112. And you can see on the bottom here, I actually had quite a bit of this bought at 93.12. So I really managed to time that nadir quite nicely. I simply just didn't hang on to the stock. So I timed it right down in this port here, almost at the absolute bottom of that nadir here. 92.98 looks like, at least for this graph, the bottom of that peak there. So I timed it here. Should have held onto it, made a nice, very good swing trade and sold off. Did not do that, so sold prematurely on that one as well. But again, that's another stock that would be considered a contrarian investment. You're basically buying when it pulls back quite considerably. So Equifax there, EFX, LB, Ford Motor Company, GE, all companies I think that have great long-term potential, but have some transient disruptions in their business, whether that's like a Ford that has sort of these industry-wide cycles, or a GE that has had some bad management, an L Brands that has, again, some changes with online retailers kind of invading their space, but they have very, very loyal customer bases. That's the big thing behind L Brands. I don't think a lot of people are going to be leaving Victoria's Secrets for another generic brand on Amazon or another online store. A lot of these companies as well kind of put their confidence in the fact that people want to try on these clothes. They want to have that experience with the store environment. So I don't think that's ever going to be stolen from the hardcore loyal customers for these kinds of stores, Bath and Body Works included. So that's what contrarian investing is all about. I hope you guys got a sense of that from the companies I talked about: GE, Ford, L Brands, Equifax, all companies I would consider to be undervalued, that can definitely turn their company around, turn that confidence around. The stock price will follow, and then you can sell off for a very good buy and hold and or swing trading strategy. So that's what contrarian investing is all about. That's why I'm buying into these types of companies. And I just need to hold on to these companies a little bit longer than I have been. I've kind of been jumping in and jumping out right away, try to make a 0.5% or 1% return on money. Really need to start holding these companies for the longer term. L Brands missed out on a great opportunity there. Ford missed out on a great opportunity, as well as I was day and swing trading the stock, so I really wasn't able to get those qualified dividends or capital gains, preferred capital gains rates as well. So made a few mistakes there, but again, this whole portfolio is about learning how to invest. I'd rather make some mistakes here rather than on my other portfolio. So quite happy about so far how the portfolio has been turning out. Please let me know if you guys have any things that you would add to the portfolio, you'd take away from the portfolio, or other types of investing strategies. I've been doing a lot of dividend capture, been doing some buy and hold, some swing trading, then also this contrarian and type of investing with some of these stocks I think are undervalued. So lots of different ways to play the market, and been having a lot of fun doing it. So please let me know what you guys are doing with your portfolios. And again, not to make the video too long, I'll kind of end it here. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. I appreciate all the support on the channel. Definitely appreciate it. Again, if you guys have any great video ideas, stocks, a lot of you guys have been mentioning some great stocks I'm going to be putting some videos out about. Definitely thank you guys for that. Definitely appreciate all the advice. And yeah, kind of with that, I'll end the video, and we'll see you guys next time.